All right. Hey, Andy, Steve, what's up?
Hey, thanks, Scott. Hello, everybody. Hello, Andy.
Hello, Steve. Hi, Scott. Hi, everybody.
All right. So, yeah, looks like I've got the questions panel open here. Can't believe it's another week. I know I say that every week, but this seems to be the benchmark of how time flies. So let's get started. I see people continuing to file in. The people Trade Ideas disclaimer slide. We are a software as a subscription company. We're not registered investment advisors. So this is not a solicitation for financial advice or opening up accounts to charge you fees or anything like that. Everything you see in here today is really just the opinion of non-licensed Andy and Steve. So there you have it. So we have a test drive coming up, and for some of the people that might be in the test drive, normal waking trading day, and it starts with Barry Anderson's live trading room. Few hundred people, 400 people maybe in there on a given day, and a handful of really good traders that take the lead in the chat window. But Barry is showing the trade idea, showing his desktop, talking about his methods, his trades, and certainly helping people that need any assistance with the program. You got to go in there and ask him, and don't be shy. He will certainly help. And so he is there Monday through Friday from bell to bell. A lot of times he'll close down in the final hour because his method is really to look for the action in the morning, and a lot of action in the morning really starts to die out late in the day, and he's wise to do that. So there's that. There's the afternoon webinars, which we're speaking with now, usually Monday through Thursday. And then we have a Friday support session, which is really valuable for people that don't want to do a one-on-one session or pay for that, is what I mean to say, or talk over the chat. You can come into the Friday support sessions just like GoToWebinar here, and we'll demonstrate our screen and answer questions. We can share cloud links with you if you're having trouble creating a scan or something along those lines. But Friday support session is a great resource that's free and also available to you guys every Friday. And then lastly, while we're still doing it live, the TI University is a 4-day course that starts Monday through Thursday and repeats Monday again through the future for some different approaches to education, more streamlined approach. But for now, we still have these classes where you can show up and participate live, which is pretty cool. All right, now that we've got our full boat, probably the full attendance is here, it seems like, and the reminder this week, and yes, I did borrow this slide from Brian Shannon. I asked his permission and he said it was cool because we're friends. And it's just a reminder that, humans and machines, Trade Ideas is the machine platform, but it's going to give us some great ideas as human discretionary traders. And boy, I've got some good content today regarding that human discretionary. So quick look, a lot of stuff going on. Going to mix things up a little bit. I'll do a market recap, certainly a lot to talk about there. We're going to go right into the trade of the week, of what type of setup's been working lately and what is it and why are we using it. I've got some thoughts on Nike. It's not behaving. We'll take a look at that. Then we're going to talk about the new Neo. I'm going to set up the new Neo in the AI Holly. Today was the second full day in production. Everybody got to see it in real time. And I want to kind of give you the backstory about what's going on there and what's going to happen to the other two channels, and dive into a couple of really nice trades humans might want to, that holding the 10 period move like that. And then you can go and type in 10F. The filters are in there. And it just begin about thinking about that scan that I've talked about the last couple of weeks, which is kind of that setup that we talked about with CLF and Lyft and some other stock price bases, and then kind of floats sideways and then taps on the 10 period moving average, and that's the signal we want to try and scan for. So I'm not saying we're going to come up with it here in the moment, but I thought we might take 5 minutes and just try and look at the big picture and maybe come up with a framework or a skeleton of how I might start going about looking for that scan, and certainly some value in that. Here first, we have a rising 200-day moving average. The 50 is under the 20, and the 20 is under the 10. And the 10 has been supporting price, giving us a confirmation that the move is on. This was the breakout level, a beautiful 4-day test here. Let me clean this up a little bit. A beautiful 4-day test here of our pivot level, just to remind us all that what was prior resistance can become future support. And that was just about as textbook as you can get. I mean, look at a couple of those wicks down, test, push right back up. The buyers said, no, we're not having any of this pullback. Beautiful fill of the gap there. and then off we went. Well, now, as I mentioned yesterday, we're getting a little too far ahead of ourselves. There's a lot of space here in between the rising momentum line and the current price action. So I said yesterday in Jamie's webinar, I didn't really think we'd get too much more follow through. The Qs might be a different story. We'll come to that in a second. But for the S&P, the broader index, I felt like we got a little bit ahead of ourselves yesterday, and some good old backing and filling and some digestion would be in order. Maybe a couple of early morning sell downs, but let this moving average catch up to it, and then we have another inflection point, another decision point to see what it is we're looking for. But kind of feel like we're waiting for some sloppy action going forward in the micro picture, but in the macro picture, you cannot deny what happened here. We said we want to see a breakout and a hold above. So no longer is Andy's theory holding true, because what happened was the Sherpas got the mountain climbers a little bit acclimated up here at this base camp, and now they're breathing oxygen a little better, and there's no more repellent of high prices and pulling back. They gave us 4 solid days of closing prices to confirm that this is in fact going to be a continuation of that trend. So therefore, there's zero bear case to be made. If you're a bear and you're holding short and you're just watching these prices move higher, and your thesis is that something is going to happen and you're just waiting for that something to happen, and you'll show the market and the market will see, you're really in a losing position. This should be dictating your discretionary portion, not your biases or what you think might be coming around the corner, regardless of what that could be, whether it's economy or global geopolitics or tariffs or what have you. The market is screaming at you to not be short, is what I'm trying to say. Go over to the NASDAQ, and it's even stronger. The NASDAQ was always the strongest of the two, but also gave a real nice breakout here of the prior resistance and came back and actually tapped on it a moment and said, see ya, and took off. Also, same things going on over here. There's a lot of space in between the current price, so that gives me a little caution for, in other words, it gives me a little caution to start taking new positions on charts that look like this. This is a chase up here for the most part. We want to see, and we're going to get another period where the market and the indexes will definitely settle back in and consolidate again and give us some more chances. So that's what's going on in the NASDAQ. That's the leader. That's a couple of real strong candles the last couple of days. It's not looking like it wants to give back too much. And Andy, you're my witness. It just froze.
Oh.
Yeah, we're working with the developer. There we go, it unfroze. All right. Nope, it froze again. There we go. All right. So zooming, it didn't like that zoom very much. Interesting. Working with a new version here, guys. Sorry. All right, so the NASDAQ's extremely strong. Can't get much of a pullback, but still, I wouldn't be chasing it here at these levels. Which brings me to, we'll keep the IWM for last. The Dow, on the other hand, is just recently breaking out and trying to post a couple of closing days above the pivot line for confirmation and doing so, but also still a lot of space in between the moving average. Now, I mentioned to Jamie yesterday and also Andy that we don't have a whole lot of control over our 401k accounts, but we've talked a lot about this giant range, the IWM, the small caps, the Russell 2000s have been in. I'm just going to draw it for the most part, kind of where I'm going to call it right there. All right. I made a big adjustment in the weighting of my 401k yesterday to take out of the big caps and the bonds and throw a lot more weighting back into mid caps and small caps, because I feel like the market has confirmed that it does want to move higher, and it's just a matter of time before the big billion-dollar money managers decide to try and get some separation and some alpha in their account compared to the index. They can't just buy the index because they'll never get separation from it. But when we see down here the respective IWM is nowhere near its all-time highs, where all the other guys are all up in here. Plot graph, if you will. This is where the alpha lies. Now, without getting too tricky, what I think is going to happen is, and yesterday was a perfect example. Look at that blow-off wick right there. All right, we went from a bottoming tail to a blow-off wick right on cue, right in the giant 1 year trend line channel. However, I'm going to try and get a little too cute here. What I think needs to happen, and what I hope happens, is a nice 2 or 3 or 4 day pullback, and then we have the big move. So keep an eye out in the next 4 or 5 days if we can get a nice pullback and some consolidation, again, to use the analogy of the batter battering ram, everybody holding onto the big log, trying to break down the castle door. Sometimes they got to pull back and get a better grip on it and dry it off, and then that secondary push will move. That's what I think is going to happen in the near future in the IWM. So I changed up my 401k a little bit to try and at least get some kind of control over that thing. Can't help it. General question, the system's been sluggish today. Jeff, I don't know what version you're on, but I'm on a brand new version and I'm having trouble sometimes trying to resize windows or scroll, and things will lock up a little bit on me. So I'm not sure if that's the sluggishness you're referring to. You can always go to account and reset connection right there, and it'll ping you to a different server cluster, and that might solve some issues if you're having trouble with backtesting or any other slowness if you might feel. I'm just having user interface feel here. All right, so we got a lot to get to, so let's get going here. The next thing we want to talk about is trade of the week. Did you want to add anything before I moved on?
No. I haven't seen any reports today about sluggishness. So Jeff, I don't. We would definitely see them in support. So I haven't seen a whole lot. So yeah.
Before I leave, this is the treasuries. The treasuries were looking decent as a defensive play if the market didn't go. Now it's got that bouncing ball look. It's just looking for a crack in the ice, as is gold. Was also kind of interesting to me the last couple of weeks, but all of a sudden, if the market's going to find its way higher and stocks are going to find their way higher, there's no real reason to get excited. So gold was interesting back here, but look, it dropped back way into the zone under its moving averages. It's just a complete mess right now. No longer interested in gold or silver for the most part. All right, so let's get to a metal play. CLF, let me back up a little bit. Remember 3 or 4 weeks ago, we had the X was our trade of the week. And let's start to get familiar with what we're seeing here. A nice saucer bottom, and then nice little areas where it's flattening out, and then we kind of get our move. Now, granted, X did have to wait for its earnings, which is the way it is a lot of times these days, before it got its move. Lift, before it earnings, spoiled it a little bit. Same kind of a thing. Here's that nice basing pattern down here, and then that's the spot I'm looking for right there. As a matter of fact, what we're going to try and scan for a little later is this moment in time right here. All right, bouncing off a nice base, back above the moving averages, a few days of sideways action, and the trigger is the coming down and the counter move, the head fake, if you will, before a lot of moves trigger, and that is what we're going to try and scan for later. So in the email that went out, what is the scan that we've been using and why have we been using it? Well, let's go to CLF, same kind of a thing here. Let's fast forward to, I'll say, yeah, perfect. That's exactly what I wanted right there. Going into the weekend, this is what CLF looked like. It had that downward looking saucer bottom. More than that, it had a couple of nice third tests right there, kind of a half test there, but 3 touches and back up and moving sideways along. And then when we also saw the chart of X looking pretty good, that was before we had the trade of the week. You got to remember, Cleveland Cliff is a iron ore mining. So iron ore is what they shove into those fancy furnaces that X has been investing in lately and talking so much about. So forget the story. We don't care about the story. We care about what the price action's doing. And to make the second part of this discussion, the reason we've been going to these types of trades, X and Lift and CLF, these bottom basing trades, is because the market really hadn't confirmed, what it was going to be doing. And as we've all seen a lot of times, some of these high flyers you click into, they can pull back pretty hard. You can take 3 days or 4 days of upward movement, and if you want to buy breakouts in this kind of market, some of them might work, but some of them might reverse pretty darn hard. But the chances of something like X or Lift or Cliff that's already put in a solid foundation, this is like a big slab of concrete here, chances of a big reversal giving back 4 days of up move are not as great down here. And that's what we've been focusing on lately, and that's what we've been calling lately until things change. Now, we might go back to looking for bull flags if the market continues to grind higher, but until it proved itself, this is the kind of stuff we were looking for, because if it didn't prove itself, and if it did fail and roll over, then the ones that were the high flyers were the ones that were going to get punished the hardest, and we don't want to put people in a position to punish themselves. So Cleveland Cliffs did trigger yesterday, pretty much on the open because it gapped up as we thought it might. But let's look at the intraday swings here a little bit. So there's the gap up yesterday, and we had mentioned in the article you can chase the gap if you want. Sometimes they come back and fill. You can be patient and come back and wait for the gap fill. So some of you might have an entry in that general area for the most part. But I think this was just a little bit of a kind of a tester here. And if we look at this in perspective on the big chart, you know, it's just another red candle after the push. And as long as we're closing 1 day, 2 day, today's the day I'm going to consider the third closing day above CLF. When I originally talked about this chart, I said if it can close above this declining 50, that might be the signal. And I have no problem with sideways action. A little dip here midday is nothing more than just a little sideways action on the candle. Remember now, also we said this trade needs to be risked all the way down to here. So this is just a speck in the bigger picture of things. It's a little pullback today. So hopefully you're not having too much size where you saw this midday pullback and started wigging out and freaking out, because in the bigger picture, our stop is way down here. And if you're feeling like that, then that means you've got too much size and you need to lighten up a little bit. But the idea is, of course, for these moving averages to start to press the issue. And as this 10 period comes up, hey, maybe we'll get another sideways day, and maybe Thursday we'll come back and kiss that 10 period. And ideally, 3 steps down the road, that could be the catalyst. But that's the concept behind the last few trades of the weeks, looking for nice basing patterns. And for reasons of just trying to protect in case they didn't work, because the high flyers could pull back pretty hard if we didn't have new highs, which we now have. So next week might be a little different. We'll see. But anything you want to add on that segment? Mr.
No,
Andy?
no, I totally agree with you, Steve.
Go ahead.
I'm sorry.
Nothing, I just had a thought.
Oh, I totally agree with you. And you know, if the market, you know, kind of feel like it's getting away with you, a lot of times we've seen it in this market. Some of the stocks that have been performing very well, people long those stocks will use the opportunity at market all, you know, with new buyers coming in with market at all-time highs to sell their stock. I've seen this over and over with, you know, sector rotation and. Yeah, I like everything about those potentially bottoming patterns there. Mm-hmm.
I'm glad I pulled up that slide because I forgot we did have another one, Nike, last week. Now, I got a lot to say here. This was also a pullback alert. Now, obviously, in your picture, it was a stock that was moving higher, but we didn't buy a breakout, did we? Those people that bought the breakout back here, they had to watch this suffer, and then they watched us take a nice, easy entry. We are right at the entry. I mean, there's no harm, no foul at the moment. However, I don't like what's going on here, and I'm not going to give this one much room at all. You know, I think the original stop was down here, and there's no need to risk this down here anymore. Why? Because in my opinion, this should have bounced on that day right there. And if it couldn't bounce on the green candle day, it should have bounced on the day when it put that little through that little wick in down below and then held. I could see it maybe come from there, but we're 3 days deep now, and look what's lurking right above. The ominous crossing over 10 period moving average coming down to meet the price, which is moving sideways, which we're going to see a couple of examples in Holly and the intraday stuff. This is no good. I don't like this at all. This has completely changed perspective from this possible entry down here, bouncing and filling. We hit it sideways, sideways. We're just kind of asking for it. So I'm not going to let it go below. And here's where the crazy part comes in. The sad, scary part is they're probably going to drive this thing down on the open. They being the sellers, market making bots, whatever you want to call it. Let's zoom out a little bit and see what they're going to do. There's the blue line. I have a pretty good suspicion tomorrow that these two lows right down here are going to be tested. The problem is, I think that it's too hard to sit back and say, oh, go ahead and pull the stop and just let it test it. It'll probably bounce. I don't think it's going to bounce based on the bigger picture here. There's just way too many days going sideways, waiting for this moving average to push it. I don't have any faith at all left in this trade. I'd like to ditch it. And if you've already ditched it, more power to you. It's basically a flat. There's nothing wrong with taking a flat. We got a free look at it. Much better, as I said, than buying these guys up here and then suffering that. We waited and took our patient opportunity for a good risk reward down here, but guess what? It's not working. We have much more data now to work with, and it just doesn't look good. So I'm not going to trust this thing tomorrow to play one of those little jam downs where it goes and runs, tries to run the stops. I have a feeling it's going to keep on going. So with that
Yeah,
said,
one thing that concerns me, we always talk about stocks like to fulfill their destiny, and now when I see that gap from the day it gapped up, that's my concern. It may want to fill that gap, and yes, and a lot of time it's where Steve's marking up. It's the closing price, and
you get
which
hung up
is
on that part right
yeah,
there.
it could very
But
well do that. Yep.
in reality, this is correct because
Mm-hmm.
that really is the gap.
Mm-hmm. That's right.
So I wanted to really highlight and point that out, how easily something can look so good a couple of days ago. Right there, that looks pretty good.
Mm-hmm.
Little green candle right where it's supposed to be. And then it
Mm-hmm.
just got sloppy. And I don't have any patience for sloppiness, especially when it's going sideways and you have the momentum average coming down to meet it. This is not a good setup. So caution, major caution there on the last week's trade of the week. And you're nothing wrong with just getting out and flattening it. Shoot, I'd even consider getting out pre-market because I almost have a feeling like it's going to drive down regardless.
Exactly. I know the feeling, man.
Don't even let them have the damn satisfaction. All right, so now we're going to move on to what Michael Noss has finally been able to, not any fault of his own, but the system has been able to finally accept what Michael's been showing us privately a couple of months. A lot of screenshots. Hey guys, look at this screenshot. Oh my God, look at this screenshot. This is my new, Holly beta that was not really seen by the public. Well, there wasn't a big fanfare, but I'm going to try and really kind of point something out here. Holly Neo, which we've talked a lot about, is now brand new. I might as well just call it Holly Noss, Michael Noss, because it is a completely brand new set of back-tested AI machine learning set of strategies. And notice today, it's just blowing the doors off of our old legacy Holly, which was a nice grind higher in the bigger picture. But what I've seen the last 2 days from Michael's contribution to Holly Neo, and we'll go into it here, is a very, very optimistic. I don't want to get too optimistic too early, but it's a great start. Okay. A couple of things to start off with. I am using the values in these P&L values. I'm using something that's pretty simple. I'm using don't risk more than $100 on any given trade. So the AI is sizing these positions we're going to see based on $100 being the worst case scenario of a stop out, which we got a couple of this morning. And if I can grab this, am I locked out again here? I think I am. Hold on a moment. Which we did get a couple of stop outs this morning. Gosh darn it.
There it goes. Gosh, there you go.
So look at those values, 99, 99, and 100. All right. Let me pull this up a little bit. I'll pull this up a little bit. So what's different about the new Neo? Well, there's only a couple of strategies in here today, and I don't want you guys to at all pay attention to this win percentage because this is no longer going to be a factor. These strategies made the cut for a reason, and they hit the board today. Let me do this. Let me highlight this relative volume window, and let me just show you a few things here real quick. First trade there, 3.8, 5.2, 6.1, 26, 12, 6. Starting to see a pattern here, guys. The idea, we should have, I would have loved to have seen this earlier, but regardless, here we are now. We've got an incredibly new and improved version of a system that's looking for where there's smoke, there's fire. And Michael's contention was a lot of these lower volume stocks, the algorithms are running them. But in these higher volume stocks where we have higher relative volume, this is a more true window of supply and demand and price action. And these are not only in that respect better supply, demand, price action, these relative volumes are holding solid all day long, which gives us a lot of opportunity. And for one, look at these time stops. Every single one of these is 10 and 15 minutes before the close. This is my California time. So there's no time stops midday, no 90-minute holds, no 45-minute. These are built for all dayers. This is a great all-day strategy. And as we can see in reality, shorts and longs both did pretty much equally well today. So for the most part, that's what Michael's looking for. He's looking for the action, and we're going to find stuff that just happened to be coming off earnings. Now that we're in earnings season, that's good. We're going to find mutually good shorts as good as mutually good longs because the volume is there. And I want to start to point out something that I noticed. I'm going to start here with today. Notice today, risk off was 322, meaning Holly got out a lot of these today. I've seen a lot of profit saves. This is beautiful. Nothing wrong with seeing profit saves. This means these are stocks that are working. They're just getting hit on trailing stops. Well, it's my contention that Michael's way of designing this to go all day long, you're shooting yourself in the foot if you're going to trade this in risk off. And today proved that. Risk off 322, risk on 524, based on $100 trades. So if I were to cut that in half and go up to options and do $50 trades, you know, then my P&L would be cut in half, but still, it's a decent reward for the amount of risk that was played. So risk on is the order of the day here. And this is where it starts to get interesting because we've read books, everybody's talked about it, the gurus tell you, you know, forget the win percentage, because if you can manage your losers and let your profits run, well, that's where it's all going to take care of itself. But that's really the hardest part. That's so much easier said than done. So this kind of comes along as a really nice template, in my opinion, for assuming that it's going to be the best to be in risk on all day, which, by the way, let me just show you yesterday. I grabbed a screenshot yesterday because I started to notice the same kind of thing yesterday. Risk on was doing a heck of a lot better than risk off. The P&L wasn't quite as good, still $100 per trade, not as many trades, but you can see it got kind of a, and this is a good segue here, it got kind of a rough start, and then Holly kind of weeded out some of the bad ones, stops were hit, and as the day moves on, the relative volume starts to really show its true colors, and the portfolio grinds higher. So I want to give an analogy here, you know, an analogy to having a good risk reward portfolio and cutting your losers. Holly's going to show us where to cut the losers. That's easy. And the value is in the entries. Well, that's where all the value is happening now in the entry, because the new strategies are sniffing out these relative volumes across the board. And already it seems to be working, but I don't want to get too, as Andy says, you know, put too much of your mouth on it, because it can come back to bite you. So I'm knocking on wood. I'm doing all the things I possibly can to not try and jinx this, but it makes perfect sense what I'm seeing. And what I want to try and convey is a perfect way to trade, obviously, is unemotionally. But if you look at this like a garden, all right, Holly is germinating the seeds for us. Great. Seeds are germinating. All of a sudden, these weeds down here are not doing that great. And Holly's going to pull those weeds for us. But the idea is to let these ones run throughout the remainder of the day. Look at today's histogram. It was a grind higher, just like kind of like net grind yesterday. It started in the red, but grinded higher. And the idea is to just sit back and let these things work as they were intended to work. And again, to use the analogy, you know, weed the garden and feed the good ones. What do I mean by feed? Well, maybe Andy might show you a couple of interesting areas where you had a really good confirmation of a trade that was working. It's going sideways, and then here comes the push. Maybe that's the time to add to a great position. That's what I would call feeding the good ones, putting some Miracle Grow on it. Well, Holly's taking care of the roundup down here. And by the end of the day, the good ones, because of these relative volumes, they're going to keep reaching for the sun, and they're going to keep reaching for the sun. And so it's my contention and my hope and my theory that this Holly Neo is really the only thing you might want to pay attention to for the rest of the week. And to do that, reminder, you can come in here and clip segment. I'm clipping, I only want to see the Holly Neo, and in the trades, I only want to see the Holly Neo. And that's going to be the way it's going to be for me all week as I watch and separate this completely different way of looking for trades through the AI system than we had before. Now, what's going to happen to these two channels? Holly 2.0 is essentially going to become the swing trading channel. Michael is currently knee deep and already has some great results for 2 or 3 or 4 or 5 day type holds, which is what a lot of people have been clamoring for. So the Holly 2.0 is kind of a placeholder for the swing trading. And then the Holly Grail 1.0 will be kind of the original, but we'll still be spicing that up with some other interesting ideas. And so that's really the plans and the vision that Dan and the guys have for how the AI is going to go forward. But if you weren't aware, I really wanted to make you guys aware that Holly Neo is now a completely new set of strategies. And the last couple of days worked really well. And my contention is it works better in risk on because we're playing only stocks with relative volume. And we also talked today in the marketing meeting, you know, Barry and Sean are going to work on a lot of these new Neo trades because when we have stocks that blow up in relative volume, whether it's news or just a great move or off earnings, that tends to carry through. And so that's going to be Michael's thesis, you know, for swing trading. A lot of these swing tradings, they're going to start with a big day of relative volume and kind of move higher from there. So that's going to be our signal, the big volume days. And so Michael's onto something there as well. I don't know if I missed anything, Andy, if you want to add to it. I'm sure I missed something, but that's where we are with Holly Neo.
Yeah, well, I'm sure I'll hit up on a lot of the things you discussed in when I kind of look at some of the trades there. But tell me, did your Holly Neo just change to Neo AI just a few seconds ago? Oh, what is going on?
It looks like it's a hover feature.
Ah.
It's Brad probably working on the new. Remember he said he was working on some channel stuff.
Okay, well, mine's not doing that. So.
The hover feature. Right. Well, maybe close your channel bar and reload, or maybe it's.
Maybe, yeah, maybe that's what it is. Okay. All right. All right, let me grab it and we'll take a look at some
individuals, yeah, and how you might manage some of these throughout the day. Because again, this is a great example of human and machine, man and machine discretionary. And Andy's going to show you a few inflectionary points throughout the day where you might have some decision processes.
Mm-hmm. And yeah, Steve's a very good analogy there, Steve, as far as the gardening and all that. That's, you know, get rid of the tomatoes and keep the green beans, you know. But you're looking at my screen, guys. The only difference between mine and Steve is I am actually using 200 risk based on stop loss. So what you're going to see here is mine are going to basically be twice as much as what Steve's were. As far as the risk off P&L, and there's the risk on P&L. Okay, so let's go over a few little trades here. I mean, I'm really impressed with this first few days of this Holly Neo, the new and improved. Now, I think what you're going to find is, especially during earnings season, this is probably going to work better because it's seeking out high volume stocks that are potentially big movers. And of course, you get that during earnings season. You know, when we're not during earnings season, you know, we've seen it, but and that's all about, you know, when it comes to trading, you want to trade where it's more profitable for you. And if earnings season is the most profitable time, hey, nobody says you have to trade, you know, 365, or maybe you cut your, you know, trades way down when we're not during earnings season if you are trading the Holly, this Holly Neo. But anyway, let's dive into the trade, some of the trades here. I thought there was some incredible trades. The first one right here, which had the highest, not percentage wise, but as far as dollar amount goes, was this FTDR, which was just a beauty. And you guys bear with me, but take a look at this. And I got the old Epic pen working today too. So let me just
nice.
Look at this beautiful entry right there. Okay. Whoa, what was that?
What?
Let's see.
Oh, you got too fat. You got to go back to the settings. You got to get the little tiny dot. Hit the little dot. Hit the dot on your menu.
Yeah, screw it.
Oh,
yeah, I'll do it later. Anyway. Let's see. Is it right next to the highlighter?
Yeah, click on that dot on the it's under the eraser above the arrow. There's a little dot, and it gives you a template of dot sizes. There you go. Click the big dot, the big circular dot. The big dot.
Oh, I got you. There we go. Okay, got it. Let's see if that works. I just uploaded while you were talking. Ah, there we go. Probably not big enough now, but look at that break right there. Okay, this stock gapped down, rose to close to yesterday's close, and then got weak again on this 15-minute bar right here, and that is where the call from Holly is. And now I want you to look over here at the daily and see what's happening, guys. All right, we got a stock that's breaking down. It's doing it on pretty decent volume. At the time, I'm sure it was more than what it was now, probably relative volume of 4. But look at this level is it's breaking down from, guys. It's just got the low right there, and let's mark it up with a little horizontal line, and that's basically right where Neo called it. And this one was pretty much an all-day hold. Percentage at the end, risk on, you're almost at 5%, 4.65. As Steve was showing you, you're going to see a lot of big percentage gains in these. So what you want to do is just exactly what Steve was saying. These, when you have volume behind it and there's earnings, you can see this is earnings November 5th. It's going to read pre-market, and it does. You have, you know, it's the analogy I like to use about the log floating down category 5 rapids. You know, there's a lot less to hang that log up when you're in category 5 rapids versus some of these stocks with lower volume that are just in a lazy river. Okay, the algo's going to grab a hold of those just like a log, just like rocks would, you know, in a river. So, but in this case, when you got all this momentum behind it, you're going to find that a lot of these are just going to continue and be incredible all-day holds, and you really need to, you know, use that to your advantage. This one right here, you're looking at almost a 5% gain on a beautiful stock that's breaking down from basically a 4-month low right there.
Never crossed that fast line.
Another one,
reason to get out.
Yeah, no, it never did. Never did. Tried to tag it right there and just went down lower. MPW, let's take a look at this one. This was only a 2% gain there, but still beautiful trade. You got the entry right here. A lot of back and forth. I'll admit these, you know, it's tough for some people to stay in these, but you know, never really breached the stop list. It kind of basically just trade, you know, went sideways for about a couple of hours. Then finally, what happened? There it is, Steve, again, the fast line, the 10-period moving average, catching it.
That's what I'm afraid Nike's going to do.
Well, yeah.
On the daily chart.
And then you got the relative volume. Yes. Then you got the relative volume once again, 5.5, huge volume. Let's look at it long now to the upside. This UNVR was called twice today. You'll see 2 buy ticks. This one, I'll be honest with you, it would have been tough to have grabbed because it went pretty fast. Maybe if you were auto trading and you had a big delta on there, you could have got this thing maybe around 23.20, something like that, most definitely. But if you're trying to get something like this with a 5-cent delta, you're probably not going to get it. But nonetheless, look what happened here. It's signaled from another strategy right here, and that strategy would have been, well, I'd say it was in there twice. Yeah, right here from a pullback long. So you got a pullback, entered it, pretty much traded sideways, and then you got a little extra, beef. But once again, you had a stock here, and what do we see? The fast line, the 10-period moving average forcing the action higher. You're going to see that a lot when it comes to these, high volume stocks. Relative volume 6.25.
Can I add something
and
here?
I'll try. Sure.
So when I was saying earlier, you want to feed the Miracle Grow, on that one, you watch the sideways, and you think, well, if the price action gets bumped or supported by that 10-period moving average, I might want to add to something like this. That it can be a period where
Absolutely.
You could add. But that's my whole point is that's the inflection point where the human discretionary starts to come in.
Exactly.
If that had bled through and started to fall back down, if it were me, I'd probably cut it. I'm weeding my garden, because not only is Holly going to be the one just weeding, throughout the day, you're going to look at some of these that are failing, those setups right there. That one didn't fail. That one pushed higher. But had it failed, I wouldn't blame somebody for pulling that weed out of their garden, or at least it's not a weed because it's not a negative trade, but you're protecting
the profits. Sure.
Yeah.
All right. And now the biggest, actually, I thought Shaq was an incredible trade too. I mean, basically, there's your entry. It opened up going sideways, no pain, and broke down. Basically, almost gave you $2 here, bounced back up. It's still. I mean, you could argue that, gosh, well, who wants to sit, to that kind of bounce? But you're right. But it never even crossed over the entry point, and then went back and closed pretty much at lows. The biggest winner of the day, there's a lot of good ones today, was this Frida. And there's your buy tag. Even after a big move like that, I mean, I know how most traders think. You miss that first candle, you're like, darn, I missed that one. Let me go find me something else to trade. But look at here, it basically went sideways for maybe 20 or 30 minutes, and then boom, look at all that extra juice, a whole nother buck in that thing pretty much. Another, well, almost 9% from the buy signal. So man, there was some really good ones today. And now Steve mentioned man and machine. I'm going to show you something where you can apply some of your logic, because remember, okay, these are set up with filters and looking for volume and looking for stocks hitting highs. But I'm going to show you a couple that got stopped out down here and why I might have not played these. Okay, I'm not trying to tell you, you know, how to pick the good ones and not pick the bad ones, but this is where using your, you know, little common sense the human may have over the robot, the Holly. First one, and I remember talking to Steve, I was on the phone with him when this one came through, and I'm going, gosh, you know, relative volume, nothing like the other ones were. It's closer, you know, to 2.8. I mean, look at this move it already had. Earnings had happened on October 16th. Not sure what the gap up was today, but when I see this, earnings were already, you know, took place back here. It's had a huge run, and then for some reason, it gapped up huge today. Now, that doesn't mean this can't work, but for me, this one got a little bit ahead of itself from $65, $3 all the way up to basically to $78. I like those first day moves.
It's like how it's like how Shaq followed through because it's first day of earnings. That CCK worked on the first and second day. Look at the follow through there. So yeah, the farther you get away from that event, that catalyst, the more it's harder to trust.
And I'm going to show you Xerox. It's almost going to look identical. And look at there. Okay, there was your big move. Okay, then it looked like it wanted to go again, but look at, you know, another what, 5-6% gap up after this huge move. I would be a little bit, you know, a little bit leery and something like that. So yeah, I just want to let you know the difference between something like these last two trades that I just showed you versus this FTDR on the very first day of earnings. You know, relative volume around 4, breaking down. The move is happening today. People are getting out. Okay, earnings were out. Well, for whatever reason, sellers are getting out. This is why a lot of times, you know, I tried to discourage people from trying to play bounces, even intraday on the first day. People are wanting to get out. Shaq, for example, you know, there could have been a lot of people in here. Oh man, I finally caught it. You know, this thing's turning around, and it's only to turn around and go back down to lows. So, you know, be careful anytime trying to catch it. We talk about it all the time, trying to catch a bounce, you know, on the first day. Even if you're swing trading, look at Twitter, you know, these things can take a very long time. And this has been, what, almost 2 weeks, and it's still hovering down here near lows. So anyway, Steve, I know you have something else to go. So, but anyway, I'm really impressed, and hopefully, like I said, yeah, we're not putting the mouth on it too hard. So I'll take it back to you, Steve, and you can get us out.
Yeah, I remember I used to do that all the time, Andy. I used to think, oh, look at this stock's on sale down here. And I remember I'd look at like one of these seasoned traders like Gus or somebody, they'd say, what do you think? And he just looked at me and shake and said, no. And I didn't really see what he was seeing at the time until we started to realize, man, it takes a good 2 or 3 days to squeeze out the weak hands after a bad earnings report. It's very, very hard to jump in and see a pattern intraday the first day after bad earnings and expect that to work and reverse and go back up. It's exactly. A lot of people don't want to get out, and they're using those. All right, so should be back on my screen. We got about 5 minutes here. I don't have any alerts to set this week, but I did want to check in last week. Again, I don't know what happened here, but Kroger was on our list, and I believe it was after that nice tail I think we had, a washout bounce. Couple of days, nothing, and then it must have been, I haven't even looked, but it must have been really good news, but it wasn't earnings, because I looked at earnings. But nonetheless, it triggered day and a half, and then boom, today, big day, so that one worked out pretty well. KSU, also a real nice trigger. Looks like it was way up here. Those green lines are the triggers. We've had, oh, how about that? A day and a half of push through there. Actually 2.5 days if you consider that first candle. Lows, another one of those wicking bottom candles, nowhere to go but really up after that. And so a couple of nice days drifting higher in L. AGO, just a grind higher there, nothing really special. And I think this one's negative a little bit. This one's ugly. Look at that action. Doesn't want any part of that. It's just spiky and wicky.
Man, yeah.
Really weird, but
5
it's
times
on
up
here
there.
for a reason. It's on here because it's got a high short float. But actually, no, it's not that bad. 14%. Anyway, let's put that back in the corner. I'm going to go ahead and delete these, and I'll start fresh for my. Now, what we want to do, just spend 5 minutes here, 6 minutes at the most, before we bring Scott in. I talked a lot about that bird in the hand setup, and honestly, Lyft had the best looking one of all. If we go back in the right scheme of things, there it is, right there. Maybe a little bit. Let's see if I can get it. There we go. Something like that. All right. I'm looking for something like this where it's been in a downtrend, but it's basing. But the trigger is the tricky part. The trigger is going to be that it's going to have to be a new low. So let's talk ourselves through this. I want to see a stock that's setting up like this, and we'll take care of that through the filters. Let's work from the event backwards. I want to see it when it makes a new low into the 10 period, which we now have. So, and again, we're just going to, I haven't even started this yet, but I figured it'd be decent content to start it with you guys, because this is how I would start it. First thing we're going to do is we're going to grab that new low and just activate that. That's going to be our trigger, but it's going to be so much more advanced. So let's bring in the new guy, 10 SMA right off the bat, and it's going to be a daily percent trigger. We're going to use that filter. The filter's been added. Working backwards now in this part of the stock. Well, what do we have? We have a flattening of the price action. So I would pick a range. I think a 5-day range would be interesting. That's not too wide. So I'm going to look for 5-day range. 5-day range in percent. That gives me the ability to scale it. All right. Let's work backwards even more. What's this stock been doing? It's been getting smashed. So in a 60 or 90-day period, let's go out 90 days. This is another brand new filter for the most part. It's called the position in 90-day range. Let's try it this way. Position. And we'll go to our ranges. Oh, it's because it's a 9-month position. Okay, so 6 months. Let's do position in 6 months. And we might even do 3 months too if we really want to get tricky.
Yeah, you could.
You
may miss a lot if you do. Yeah, you may miss a lot if you do 6 versus 9.
Let's add that filter. And then also I wanted to get kind of tricky, and in the last 20 days or the last 10 days, let's do the last 20 days. We're kind of basing for the most part. I'm basically just going to load up all these filters and see if I can make use of them. That last one, position in 5-day range, I'll add that filter too. All right. So what we're doing there is we're looking at the bigger picture, guys. We started off with 9 months, 6 months, 3 months. Well, when you take that position in range, if it's a 3-month position in range, the 3-month low, let's identify that. I gotta click OK first just to get out of this thing. 3 months. So 1, 2, 3 months. Let's zoom out. So where are we on the 3-month low? We're pretty much close to that. This is 100, the value of 100, and this is the value of 0. Shit. Value of 0. Looks like all our stuff is happening down here in the 10% range. So we say we don't want to see it more than, a certain amount.
20.
So I'm going to start off by saying in the 3-month range, I don't want to see it more than 20% above its low. We might adjust that, maybe 25%. Oh, we got some stuff to work on here, don't we?
I don't think you cleared them.
Start from scratch. Yeah, start from scratch. So new low, activate. What was I looking for? Position in 3-month range. Geez, I got a lot of stuff in here.
Yeah.
Position in 20-day. No. I want to start at that 3-month range. There it is, position 3-month range, cap it at 25%. It's no more than 25% off of its 3-month low. All right. Position in 20-day range. Let's see if I can go back to that one. So now we're starting to focus on this area here. Position in 20-day range. That's change in 20 SMA. That's change in 20 days. Maybe I didn't grab it. Position in 20-day range, add filter, position in 20-day range. So now this is where we want it to be kind of definitely above the 50% mark is what I'm going to at least start with. So in the last 50 days, yeah. So I'm trying to go bigger picture. I'm trying to go bigger picture, smaller picture, and now we're going to go 5-day range. And for this, we're not going to do a position in range because the event of tapping a new low into the 10 period is going to satisfy that. So I don't need to worry about that, but what I do want is my 5-day percent range. And let's look at the percent, not position. I want 5-day range. There's 5-day range, not to exceed. Let's think about this. I'm just going to put a 2 in there as a placeholder. All right, so 5-day range when it was looking good like this. Forget that big candle. 1, 2, 3, 4, 5. So it went from 39, to 42. It's about this is 30. I'm gonna call it 39. That's actually I'm gonna call it 40 to 42. So that's about a 5% move. I'm gonna cap that at 5%. That's the range of that 5 days. So I think if I do anything less than 5, I might miss some stuff. I'm going to hide the unused now. I'm sick of chasing all that stuff. 5-day range, not to exceed 5%. All right. Now we have to go do the magic 10 SMA. We're going to drill down into our event. Add filter. So the new alert, the new low is not going to fire unless these are satisfied. And I also don't have a price in here. Of course, I would need that and some average daily volume, but I'll get to that. The big meat of the skeleton here is to try and get these time frames down. And so now we're going to determine that the 10 period moving average, the price in relation to the 10 period moving average, I could go 0, but I'm going to go a little bit below. I'll go 0.05 below and 0.0, I'll go to 0.1 above. So I'm giving myself a little bit of a wiggle room here. The new low is not going to print unless all these position and range parameters are satisfied from the 6-month down, 3-month to the 20-day to the 5-day range. And the new low will trigger my A window if the new low taps down here. So basically all it has to do is come down within 0.09 of the 10 period SMA on the daily, and I'm going to get an alert. So the idea is I want to see, let's click OK here. I'm not expecting anything out of this yet. But my idea is to catch this moment in time right here, guys, is when it just pulls back and taps that 10 period moving average, because in my experience, that's a counter move. That's a very interesting setup. So this is by no means a finished product, and I'm not going to share it with anybody. I'm just kind of showing you, trust me, I will share any finished product I have at some point. Sure, you can look at the strategy real quick. Sri is asking for the summary. Most importantly, the 5-day range is no more than a 5% range. It's it's above the midway point on the 20-day range. On the 3 months, it's no more than 25% above that low. So that's kind of the way I'm backing into it. And then lastly, this is the 10 period simple moving average, 0.05% below to 0.1% above. Anything in that window, a new low will trigger for me. Let's click before we bring Scott in. Let's just click. Hey, look at that. I mean, I don't have a daily moving average or a average daily volume, Andy, but the shape is kind of there, isn't it? How about that?
Yeah, it's kind of what you're looking for.
Yeah, I'm going to leave it right there.
Sure.
I'm not going to go a step further. We're going to go ahead and say this is a great starting point. And what I do is I'm going to save to my cloud the 10 SMA tag, we'll call it. I may change the name at another point, but that's my starting point. It's now saved to the cloud. And that's really all we have to share with you guys today. So I'll bring Scott in and talk about these new slides.
All right. Yeah, big test drive coming up. It's actually going to be a 2-week one because we've got our new simulated trading platform available during the test drive in the beta version that you should download once you sign up for the test drive. And that's going to give you plenty of time to get used to it. There'll also be a contest where you can win a year of Trade Ideas Premium. Just go to trade-ideas.com/test drive. It all starts Monday, November 11th. And a little secret, if you sign up in advance, you're going to get access to it on Friday after the close, so you can spend a little time poking around before Monday kicks off. We're going to have some special webinars and lots of great information during that week, so stay tuned for that. But do sign up in advance so you get that early access and you get the full 2 weeks. So trade-ideas.com/test drive. Don't miss out. What's the next one? Podcast? I don't have the other thing open. Oh, ebooks. Yes, we did just release those not too long ago. Both Steve and Andy contributed chapters, so get them. They're free. Just go to trade-ideas.com/setup. There's 2 chapters per book, per PDF, and they include some cloud links you can load up into your layouts that apply to the chapters. And the books are arranged by subject. So there's 2 for each subject per PDF. Good reads. They'll help you out. We've got a podcast. Have new episodes up most Fridays, so search for Trade Ideas Podcast wherever you listen to them and add us as a subscription. You'll get the newest ones downloaded immediately, and then you can check out some of the interviews that we have in the archives. You can scroll back through the archives and find some of those good interviews with guests. We've got a new code for November for this webinar, Trade Turkey. It's case sensitive, so use caps. Let you save 15% off your first month or year of Trade Ideas. If you're ready to start up a new subscription today, just use it. And if you want to do an upgrade today from standard to premium, get access to everything, go ahead and use that now too. We have an email to send your questions, and that's info@trade-ideas.com. That goes into our help desk software that lets us route it to the appropriate team member to fix your problem and help you out, answer your questions. So use that for most of your questions. You can also follow Steve on Twitter @TodayTrader. I follow @TradeIdeas too. We also have @QuantBot, a couple other handles. Facebook.com/TradeIdeasPro is the Facebook page to like so you can share stuff we post with your friends. Thanks, Steve and Andy. Thank you all for attending. We'll have the recording up later on, and you'll get a link in your email. Thanks, guys. Thanks all.
Thanks. Bye-bye.
Bye.
Thanks, everybody. I'll see you Thursday.